Oil prices have kicked off the new trading week with a consolidation at the 1.5-month high. Moreover, the asset may well edge even higher. Higher oil prices can be attributed to a steep drop in the dollar, which was largely emotional in nature. However, the greenback is expected to bounce back shortly, which will inevitably bring oil prices down. At the same time, the market will hardly see a sharp sell-off today. Its decline is likely to be gradual. Now let's take a closer look at the trading chart. Brent crude oil futures climbed to $78 per barrel. That's the upper boundary of the sideways range, limited by the levels of 71.5 and 78. As a result, the volume of long positions decreased, which caused a price rebound. In this case, there are two possible scenarios. The first scenario suggests a continued sideways movement, with an increased volume of short positions near the lower boundary of the channel. And the second scenario is that the asset will get out of the sideways range, provided that the price stays firm above the 79 mark. Traders are closely monitoring market developments and considering these two scenarios to make appropriate trading decisions. Likewise, a sharp decline in the greenback affected gold. The precious metal even tried to rise above $1,930 per troy ounce, but failed. As a result, the asset stabilized at around $1,920. However, an expected rebound in the US currency due to the inverse correlation between the dollar and almost all other instruments will inevitably lead to the lower gold prices. Most likely, they will head toward $1,900 per troy ounce. However, market sentiment may shift if the quote rises above the 1,950 mark, so traders are recommended to follow the current price movements and consider these factors when making trading decisions. And the ruble is a rare exception whose correlation with the trends in the global financial market is rather weak. This is due to a number of factors, the main one being unprecedented Western sanctions. So, the Russian currency continues to have a life of its own. The focus of ruble traders remains on the Bank of Russia's reaction to a continued decline in the Russian currency. The dollar even rose above 94 rubles but then pulled back to the area of 90 and 91 rubles per dollar, given that the report on the balance of payments, which could lead to a stronger ruble, is scheduled for the next week, and traders do not expect any comments from the Russian Central Bank in the near future. In the meantime, the dollar-ruble pair is expected to make another attempt to return to the area of 94 rubles per dollar this week. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. See you soon.